Good afternoon. Welcome to BizTech's Asian Midday Market Watch. Unfortunately, Vishnu Varathan from Mizuho had to drop out at the very last second, so I will, in the spirit of the show, must go on, run through Asian markets and just some of the data points that we've seen today and also coming up during the week. Looking ahead at Asia markets today, it's been a bit of a mixed bag once again. It seems to be a case of no news is bad news in the case of Asian markets, i.e. there's very little in data on Friday, no real headlines of note over the weekend, and it's been fairly quiet this morning as well. With that in mind, the Nikkei 225 continues to grab those AI/technology tailwinds. It's crept higher by 0.35%. Shanghai, meanwhile, in that spirit of no news, has sunk by 0.35%. Hong Kong has followed it lower, down 0.55%. The ASX 200 is gyrating around unchanged for the day, just up 0.3% at the moment. Kospi in South Korea has fallen 0.52%. Straits Times has fallen 0.73%. That could be due to some of the data we've just seen come out, and we'll discuss that in a moment. And the Kuala Lumpur KLCI is down 0.13%. Now, looking across to the data releases today, Singapore's industrial production has just hit the wires. Market commentators were expecting an improving number after the Singapore Nodex data last week, but that hasn't happened, and we've seen quite an ugly number come out today. Industrial production year on year up just 1.1%. Month on month, it's fallen by minus 5.7%, which is a massive change from what was expected by commentators and economists. They were expecting the month-on-month data to rise by plus 3%, and no doubt that is playing its part in weighing on the STI today. Currency markets fairly quiet at the moment, as is digital currencies and gold and oil. Again, that is probably a function of there being very little headline moving news out over the weekend and this morning. If we look across at the data this week, though, we do have some interesting numbers coming out. Japan inflation tomorrow morning. Now, if that number comes out higher, that may increase those prospects of the BOJ moving monetary policy finally at its next meeting. That possibly could weigh on dollar yen tomorrow. We have coming out also US durable goods. But I think the main numbers this week that we're going to see, or that will move markets, will be US GDP, which we're expecting plus 3.3% year on year. But the real number out of the States will be the personal consumption and expenditure numbers. This number is watched very, very closely by the Fed as one of its tools for generating policy directions. And again, I think it'll be a binary outcome. If we see a much higher number than expected, then that will put those rate cut bets back on ice again, and that may weigh temporarily on stock markets. Vice versa, if that number comes in much lower, those bets on the Fed easing sooner rather than later are likely to flood back into the market. Finally, on Friday, we have China's PMI numbers. Given the constant procession of bad news out of China data-wise over the last few months, again, markets are vulnerable to another sell-off again, particularly equities, I suspect, if we see those manufacturing PMI numbers come out on the low side. It's expected to still be contractionary around 49.1. It'll be a huge surprise, frankly, if that comes in over 50. And the non-manufacturing is expected to be just in growth territory at around 50.8. That's all I have for today. Once again, apologies for Vishnu not being able to make it. Sometimes these things happen with their day jobs. You've been watching a very brief Asia's BizTech Midday Market Watch. I'm Jeffrey Halley, and this broadcast will be available on our website, www.biztech.asia, and our social media platforms. You'll also be able to catch it with our syndication partners, TV stations, radio stations, and websites. Thanks so much for tuning in today.